How negative interest rates will drastically affect the real estate market. Imagine an economic policy of negative interest rates, where banks charge you if you save your money and pay you to take loans. This is what President Donald Trump has been pushing the Federal Reserve as the coronavirus continues to hit the U.S. economy. Jerome Powell, Federal Reserve Chairman, resisted and said that his committee's view on negative rates has not changed and it is not something that they are considering. At first glance, negative interest rates seem like an unconventional and counterintuitive strategy. Why would a creditor be willing to pay someone to borrow money, considering that the creditor is the one taking the risk if the borrower fails to pay back? With negative interest rates, cash deposited at a bank yields a storage charge rather than the opportunity to earn interest income. But here, the idea is to incentivize loaning and spending, to encourage economic activity rather than saving and hoarding. So, go buy a house or make a business investment, which is the point of negative interest, to spur more lending and to boost more economic activity. Though it seems unprecedented measures to stimulate the nation's economy, Sweden's central bank was the first to bring it into play, and later Japan, Denmark, and Switzerland also opted to offer the same negative interest policy. The idea that the United States would also adopt the same policy in the near future seems to become a reality in just a matter of time. Do you agree on negative interest rate policy to be adopted also in the US? We want to hear your thoughts about it by writing in the comment section below. Also, hit the like and subscribe button so you won't miss any exciting and relevant videos. So, if banks would penalize consumers for saving money, it wouldn't help in a time when the economy is unstable and threatens to crash. But this issue on the negative interest rate continues to raise a bunch of questions. Penalizing the consumers for saving money may not directly lead to more spending. So people would choose to withdraw their money out of the bank and just hold on to it. Maybe just put it in a chest or leave it under the mattress. We know hoarding is evil. We've seen it when people panic and hoard all the tissue paper in all the shelves of a grocery store. When people hoard, it stifles demand for the economy's products and services. The same happens in cash hoarding. Dollars unspent and left lying under your mattresses would reduce sales. And as sales decline, profits drop, layoffs increase, and the total social incomes decrease, making less or no available for consumption. Banks would not find negative interest rate beneficial and therefore would not agree to it. While bank expenses include interests that are paid on deposits, we know how bank generates their revenues, right? Through interest rates from collected loans. Since banks have certain assets, such as mortgages, that are contractually tied to the prevailing interest rate, the negative interest rate could squeeze profit margins to the point where banks are actually willing to lend less. This model turns inside out, or upside down, or however you want to describe it, squeezes the bank margins. Another likely scenario is the high appreciation of assets. When there is a higher demand, as a result of more lending, what do you think will happen to prices? If everyone is bidding for a 1957 Corvette or a 1,000 square foot property in Miami because everyone is being penalized to save money in the bank, how about the equity price? That's definitely a concern. Of course, that depends on which perspective we are looking at. It can cause real estate prices to rise. Another way you can look at this is the lower the interest rate, the lower the return expectation, making real estate more attractive to investors. In the US, although the Federal Reserve, the US Central Bank, has never imposed negative interest rates, it has come close with near zero rates most recently on March 15, 2020, when it cut the benchmark interest rate to a 0 to 25% range. If interest rates continue to fall, what might happen is a matter of speculation. Several outcomes seem plausible in terms of commercial property. refinancing may quickly skyrocket. Without an interest cost, asset managers and owners can take the money they save to improve properties and pay down debt, just in case negative interest levels turn out to be a short-term trend. There may be displacements. For instance, the number of bank branches may likely decline, while with lower costs, the number of new businesses might increase. Commercial real estate in the US, with its balance of risk and reward, could remain attractive to investors. Although interest rates might reach 0 to negative, that doesn't mean the need for commercial real estate will end and will no longer continue to earn a profit. Consider that negative rates can be found in Switzerland, Germany, and Japan, and yet these countries still function. People continue to work from home while others go back to their offices. Apartments are rented and groceries are bought. What about REITs? A real estate investment trust is a unique type of company that allows investors to pool their money to invest in real estate assets. Some REITs simply buy properties and rent them to tenants. Others develop properties from the ground up. And some don't even own properties at all, choosing to focus on the mortgage and financial side of real estate. It's important to know that share prices of real estate investment trusts, or REITs, generally have reverse connection with interest rates. When market interest rates fall, REIT profits also drops. Lower profit equals higher share prices, which is exactly what we've seen as Treasury yields have fallen in recent months. In addition, lower rates could mean that REIT borrowing costs will fall. Think about it this way: if REIT can issue bonds with a 3% yield and use the money to buy properties with an 8% return, its profit margin is 5%. If it can issue debt with a 0% or 1% yield, the margin gets much better. This is a simplified example, but is the general idea of how REITs grow. While players of the nation and economy are tossing the game of negative interest scenarios, Jamie Dimon, JP Morgan Chase Chairman and CEO, is right when he says,
"It's kind of one of the greatest experiments of all time, and we still don't know what the ultimate outcome is."
But one thing is certain: if negative interest rates have decided to come into play in the US, the game will surely change. If this video has changed your perspective about how the negative interest rate can influence the rise or fall of our economy, please be sure to write some comments below. And while you're on it, don't forget to give us a good thumbs up and subscribe to this channel for more interesting video updates. Thank you for watching. Are you ready?